Hello friends, welcome back to SRM Intraday. Today we are going to discuss the chart analysis for the tomorrow's trade. So we are preparing the Bank Nifty chart for 6th August 2021 and it is Friday. And if you observe the 1 hour time frame for last 12 days of Bank Nifty chart, see in this particular zone, Bank Nifty has spent around 1 day, only 1 day, and after 150 points gap down in the same zone, the market has spent around 5 days. After a big crash in the market, again the market was consolidated in the same wedge, and this is the date actually around 4th August. On 4th August, market gap up. Market was gap up around 70 points. This is a 70 points gap up, but the market has filled this gap. This gap has been filled by the market here. The first 1 hour candle has filled the gap. That gap was made by the market around 10 days back. 10 days in the sense 10 trading days back. Gap was formed and it has been filled. Okay, right. And see, actually here the market has opened gap up 70 points, and continuously the market was participated in 800 points of rally. This is a 800 points, around 800 points of rally. But that means market entered into the first wedge. So today market opened with bearish candle from 5 minutes and 15 minutes also. But the market is saying that it could not stay here within this particular wedge. Immediately in the next 1 hour, I'm talking about the today's market, 5th August. A bearish candle broke in the lower line, means support line of rising wedge. You know well, rising wedge always showing what? Negative bias or negative sentiment, negative bias, right? We are talking about the short term, right? So actually, I took a trade here, actually exactly on the support line, and market again tried to spend here, but while closing the market, actually market closed below the wedge, below the lower or below the support line of rising wedge, showing negative bias. It is showing negative bias. So if tomorrow market opened flat, this is our plan. If tomorrow market opened flat after 15 to half an hour, 15 to half an hour, or at least half an hour consolidation, if one bullish candle, it should be a bullish candle should break the market open flat, and if it break the resistance line of rising wedge, I can go for buying. Means I can go for long. In the sense, I can buy the call option, or I can buy the future, or I can sell the put option. Okay, but if market open gap up, actually market should not open the gap up here. If market open the gap up, remember there is a 80% of probability to fill the gap. If market open the gap up in 5 minutes, open the gap up, and if you see a big green candle, immediately don't go for buying. There are two ways to buy. First, it has to fill the gap. Definitely 80% probability is there to fill the gap. So you can also call it as a retest. You can enter over there, or after another 15 minutes, if you could able to see a flag, if flag is broken, then also you can enter, and the target is HLTD, high of last trading day. And so from this line, means resistance line, if it is broken, it will become support line of rising wedge to this HLTD is around 200 points. At least if you could able to catch 100 points, it will complete our trade. Okay, right. And coming to 15 minutes chart, see, this is a 15 minutes chart. Coming to the 15 minute chart, 15 minutes chart is also saying some negative bias. It is also showing some negative bias. Market is closed below the support line. This is a problem actually. So if market open with red candle flat but a bearish candle, immediately don't go for selling, because this key level is very important. Key level is there at 35,689, 35,689, 35,689 is a key level for the market. If this key level, the key level should not break with this kind of candle, invalid, right? So the key level has to break with a bearish candle, red color, but body should be around 80%, more than 80%. Wicks should be very less. Like that, one bearish candle has to break the key level, and immediately, if it has broken like this, immediately do not enter. You better to wait for the retest, then we can enter. That is the best way, safe trading, right? So that is my idea. If market open flat, and if the key level has broken with very bearish candle, then I can enter in the retest. Again, this is around 200 points. Once if the market break this key level, definitely market will spend here only. Total trading session will close within this wedge up to at least 130. After 130, maybe upside or downside, we can expect the breakout or breakdown respectively, but we can close the trade before 130 within this wedge with the proper pattern. Pattern is very important. And coming to the point, so actually this is a bearish head and shoulder. So already it has been broken, but this is the neckline. This is the neckline. So if this neckline is broken with a bearish candle, flat bearish candle, immediately do not enter. Better just wait to break the key level also. This is a no trade zone. No trade zone. In this zone, better to avoid the trading. Here you can go for the buying, 200 points. But you remember, we'll talk about the above HLTD in 5 minutes time frame. I'm going for 5 minutes time frame. Right. So as we discussed, the key level has to break. That means breakdown. Then this is the best way or best location to go for short. This is no trading zone. I mean, if breakout happened with very bullish candle in retest, I can go for buy. This is around 200 points. I can catch 200 points here, right? Mostly I'm expecting positive direction, but problem is 15 minutes time frame is showing negative bias. So be careful. Don't blindly enter into the trade. First, market has to give some confirmation. Then only we can buy. We can enter into the trade, right? We cannot decide the trade based on today FII and DII data, right? We have to wait for at least half an hour. Once the market is open, then we can take the decision based on the pre-plan. Pre-planning is very important. Okay, right? But see, if market is consolidated around 1 to 2 hours here, after some consolidation, if this HLTD high of the last trading day is broken with very bullish candle, volumes must be very important. It should be a volume breakout. It should be a volume breakout, right? So then I can immediately go for long, because market will definitely rally to touch the resistance level of this rising wedge. So from this particular HLTD to resistance level of rising wedge, nearly 200 points, 150 to 200 points based on the location, but I need only 100 points. If I catch 100 points, I can close my trade, right? So no trading zone. This is for shorting opportunity, and this is for buying opportunity, and this is also buying opportunity, right? But immediately if market open gap up, don't enter into the buying. Don't go for long immediately. You have to wait for half an hour and you just follow the instructions given, right? You have to prepare our own chart like this. That is very important. And key level 35,689 and HLTD 36,086. 36,086. So HLTD has to break with very bullish candle. Then only we can go for long. And this is the resistance actually. This is the resistance. See, there is one resistance zone, but before the resistance zone, definitely we can exit the trade, because upper wedge will meet right? See, this is the resistance zone. Be careful with 36,207. 36,207. But actually at 36,207, around it, not exactly 207, 36,213, 36,213, market will definitely take a halt. Then see this, because it is a headline of this 15 minutes chart. It is of course 5 minutes chart. This is a strictly speaking, this is the resistance zone. But market may halt for half an hour here, means immediately market will not go like this. Then with a small pullback, it can go and reach the resistance level of rising wedge, right? This is a plan for tomorrow, but just plan for 100 points. Be careful, immediately don't enter into the trade. Thank you for watching.